Hey y'all, this is Jim Palumbo from Dynamic Advisor Solutions, and today's video is about technology. What technology do you need to adopt as a financial advisor? What's the typical tech stack look like, and what fintech do you really need? So I'm going to tell you something shocking. Are you ready? The answer is nothing. Nil, nada, zip, zero. You really shouldn't and don't need to adopt, learn, program, or synchronize any technology. Your platform provider should be the ones doing the adopting, integrating, setup, creating workflows, and creating databases while you focus on deepening client relationships and developing new business. Look, I ran a $100 million plus RIA for nearly a quarter century, and I ran it with an 80% plus gross profit margin, 40% net after paying advisors. Here's why you shouldn't be the one to spend your time trying to figure out what the financial planning software is the best one or which billing system to use. Your job's not the chief technology officer. It does not say CTO after your name in your email signature. The nameplate on your desk does not say IT guy or IT gal. You are the CEO, my friends. You are the chairman of the board. You are your client's trusted advisor and captain of your own destiny. You want somebody else unraveling the 800-pound ball of string that is fintech today. Here's the main question I want you to consider. Do you want to be a technology executive, or do you want to be a financial advisor? You're a financial advisor, and trust me, I've been around for decades. People desperately want more of what you have to offer and more out of you today than ever before. Now keep in mind that whatever technology vendors you're talking to, they're not going to tell you this. They want you to buy their products. But let's look at the facts. The study by Michael Kixis revealed that advisors spend 20% of their time on clients and the rest on running the business of the business. The software alone, interestingly, has no impact on advisor productivity. In my opinion, it takes even more time because you're adding new tasks and new activities to your day. It's necessary, but it does not necessarily make you more productive if you're doing all the work. There's a huge opportunity here for you to gain an advantage over your competitors if you're willing to let go of being an administrator. If you're willing to let go of the administration, what Jim calls the administrivia, if you let that go, you'll be 80% more engaged with clients and prospects than the competitors in your community. Do you realize that? If clients are only getting 20% of your competitors' time, and you can give them 40, 60, even 80% of your time, think about how dramatically better the client experience, outcomes, and deliverables will be with you. Just look at the difference. Let's compare cost. If you're an independent financial advisor, think about what little bargaining power you have with the big, reputable technology companies that clients love and trust. Wouldn't you rather have names like eMoney, MoneyGuy Pro, Salesforce, Orion behind you? By the way, if you're looking for a summary of all the resources you'll need, email me at the address at the summary box and I'll send you my top 10. But as a small firm, you're going to pay full price. That's right. The tech firms love doing business with people like you. You'll be paying a much higher percentage of your gross income than a company that has the size and scale to provide those tools efficiently and at a reasonable cost. Instead, why not work with a platform? One that has the bargaining power, buys licenses at a volume discount. Also, they've already done the vetting for you. How long does it take you to evaluate, adopt, learn, and integrate multiple providers? The time and opportunity costs are huge, and it's precisely the thing that is holding you back from growing your business the way you want it to. This brings me back to my original question. Do you want to be a technology executive or a financial advisor? Let's break it down by cost. Typical tech stack includes buying those things that are essential at a minimum to a contemporary practice. CRM, customer relationship management software, performance reporting, and billing. Oh, and we haven't even included compliance yet, which is another tech stack in and of itself. So what does each one cost? Let's take an example. If you look at Orion, for example, the minimum per year cost is $15,000. You'll have several $1,000s more for your CRM, compliant searchable email with encrypted archiving and double redundant offsite backup, social media archiving, website archiving, and 1 or 2 staff members to do all of that at $60,000 per year all in. You have to count yourself as an administrator with a time opportunity cost of hundreds of thousands of dollars per year. But for the purposes of this exercise, let's just use another $60,000. So you have yourself at $60,000 per year, you have another staff member at $60,000 per year, and then you have all the technology, subscriptions, etc., between $20,000 and $30,000 per year. We'll just use $25,000 as the in-between. So if you add that up, yourself, 1 staff member, the technology, that's $145,000 per year. Interesting to note, it costs more to run the stuff than it does to actually buy the software. Now, let's say you work with a firm like mine, Dynamic Advisor Solutions. We take care of all this for you. We bundle it, we set it up, program it, integrate it, and support it forever for a few $100 a month and 6 to 26 basis points. Let's say you've got $80 million under management, AUM, and your average fee is what we're seeing as an average, 155 basis points. That's 1.2 million of gross revenue per year for your firm. So let's compare the tech costs, DIY, doing it on your own, versus outsourcing to a platform like Dynamic. Wrestling with your own tech stack and staff, you spend approximately $145,000, or in our hypothetical, 12% of your gross revenue. With Dynamic, you would only spend about $85,000 for the same package as an RIA responsible for your own compliance. That's about 7% of gross. This would be maybe $95,000 as an IAR receiving complete compliance outsourcing. Either way, it's still nearly 40% less expensive to outsource. 40%. But it's not just about the numbers. The most important thing is that now the handcuffs are off. The ball and chain is gone, and you're able to do what you do best. Be a wealth manager and watch your business grow exponentially. You'll be doing better work for your clients, deepening relationships, improving the outcomes and deliverables in which you're now loosed to represent their best interest. You'll also be set free to build your wealth management practice, both organically and strategically. Here's the crazy thing. You could outsource your entire investment management program also, 100%, TAMP service with Dynamic, and still spend less than the $145,000 total cost that you have today trying to do it on your own, but still failing to execute efficiently. I've tried to do this stuff in-house, and I can tell you, I never got the tech stack, I never got the management, I never got it where I wanted it. I never succeeded in achieving full integration of my systems. They were just tech subscriptions, making money for the software vendors and not for me. I mean, it's pretty obvious what's the better way to go, right? So anyway, I'd love to send you an email. My email's below. I'll send you my list of top 10 things that you need as an independent wealth manager, or give me a call at the number below and we'll figure it out over the phone. I'm happy to share with you the experience and insight that we've gathered over the years. We know what it takes to make a successful wealth management practice. I'd love to help you improve your client's experience and grow your firm. So here it is again, Jim Palumbo, jim.palumbo@dynamicwealthadvisors.com. Or give me a call at the number below. I look forward to hearing from you.